What's up, man? Hopefully, everybody had a good weekend. Weekend is the time to go back into your journal and look at what happened throughout the week. Were you happy with what happened? Or were there areas that you would be able to go in and improve on? Looking back at the journal on a weekend is a good way to see what things you can improve on and better yourself as a trader. So, this morning, I want to go over this little paper trade that I took. Obviously, this one played out at the 750 to 810 macro, which is not a macro that I personally trade on live funds. So I'm paper trading this, saw the position, and I executed on it. Before we go over that, let's go over to the US 100 and let's go over the reason why I took this position and what I'm expecting as far as a daily bias. So if we jump up to a daily, first off, let's go to NQ so things can be clear. We have a daily inversion and we have a weekly order block mean threshold here. Those are the levels on the charts. Before we go down, weekly fair value gap sitting here. I'm including this gap up here. I'm including that in my fair value gap. We traded basically above this inversion. We opened up, traded back down to the consequent encroachment, tapped into consequent encroachment. We've moved away from that level, and I'm expecting price to draw up higher, taking out this high of the 12th of March last week, Wednesday's high. I would expect this to get taken out, and then I would want to see price draw up higher. We do have, looking at this calendar, you can see we have Wednesday, we have the FOMC statement, and we have FOMC press conference at 2:30. So today is a trading day, Monday core retail sales, nothing major that I'm expecting. Tuesday, no news. It's the day before FOMC. I'm personally expecting a very sloppy and messy day. Since it's the day before FOMC, I expect them to start setting the trap. And of course, the morning of FOMC is not a day that you should be trading the AM. You can trade after 2:30 p.m. That second stage tends to be the distribution with the Judas swing at 2 p.m., 2:30 being the real move taking place. So I'm not expecting anything on Tuesday. I will look at Tuesday. If price action is messy, close it up, do something else. Wednesday AM, not looking at it. PM, not trading PM, so not something I'll be looking at. And then, of course, after FOMC, we have unemployment claims on Thursday and nothing on Friday. So I would expect Friday to just be a continuation on what we had on Thursday, or it's just going to be a retracement day, depending on what happens in price action. Depends if we get to this level by Wednesday, or if not, then Thursday, and then I would expect price to retrace on Friday. So daily bias bullish That's where I get this daily inversion from. That's why it's noted like this, because I'm taking it from the NQ. Same with the order block mean threshold from the weekly. And then I just took a note of this 4-hour old high, 4-hour fair value gap, working it down. And then looking at nothing much on the 1 hour here. On the 15, I have this 15-minute old high marked out, and we do have very relative equal highs sitting over here. Equal lows sitting there. And I got a 15-minute weak consequent encroachment. We tapped that, started to fall out a bit, a little bit. With dollar, I had this 1 hour equal low, and we traded into that, and it started doing the same thing. And if we look at the, let's pull up, okay, there we go. US 500. Let me quickly pull this up here. There we go, US 500. Okay, 15-minute, we traded into this 1 hour, traded into this 1 hour wick consequent, well, not a 1 hour wick, 1 hour order block mean threshold. Kudos to me for noting it as a wick. Whatever. Order block mean threshold. Not the end of the world. Order block mean threshold. Got that there on the charts. So that's what we traded into that. Started falling out of bed. Same thing on US 30. We had a 15-minute gap. You can go ahead and look at that on your own charts. And we traded through the high of the gap and immediately came back inside of it. We also had a 15-minute order block sitting. That's the candle Friday, 14th of March, 1645 to be exact. And that was the exact candle. If you look at that candle, that's the order block. Fell out a bit from there on out. One more thing that I also want to look at, since we had equal lows on US 100, we can see here that we do not have the same equal lows on US 500. Same thing can be seen on US 30, which we also do not have equal lows. Dollar index, however, does have some relative equal highs on the 15-minute, which is worth noting. So those lows on US 100 are a little bit too clean. They would, of course, be at, we could just look at them here. They would be right at this consequent encroachment of this daily inversion. So we'll have to see how price behaves. We'll have to see if it has a willingness to want to go lower or stay above this 15-minute inversion. As long as we stay above this inversion, I want to see higher prices. If we close below this, then obviously that changes the narrative, and then you need to look for something bearish. Almost tapped into this breaker block, high low, higher high, trade through that. Almost tapped back into it. Yeah. Just have to see here if we Won't take that though. Won't take it. It just tapped into. We can tape read it, I guess. Do a little tape read on the video. We'll tape read that. See if it wants to trade into that breaker block. We can tape read that. So short position, that would be the entry, stop, breaker block. We have a gap there. We got an order block sitting right there. So no need for anything higher than that. Obviously, as per the model, 12%, 12% right there. 12%, 22 points. That is it. So let's tape read this one. If it still wants to draw lower, which you can see that we are getting respect here at the low of this breaker block. Breaker block, we got a fair value gap sitting at a little bit higher nested, and that order block nested as well. So it's a nice unicorn model. The only thing I don't like here is the fact that this was the base. We tapped into that 15-minute wick consequent encroachment. Lower failure swing here. I want to compare and contrast that failure swing with US 500. Let me check. Yeah, it was a failure swing on US 500 as well. Failure swing. What about US 30? Same thing. Same thing seen. Dollars rallying. Yeah, this should push through. We'll see. We'll monitor as the video goes along here. Anyway, that was the whole analysis. Ideally, I want to say bullishness, but uh, since since London, look at that pre-market rally, pretty pretty big rally. So this might chop up the AM session since we had that rally. Look at Friday here. Friday was a messy day as well. Friday. Let's just see here. I just want to have a look at this. Friday, 14th. Let's just see how much did we move. We moved 1.5% on Friday, so this is like 1% already. So it's quite a hefty move up. So far, I'm not liking the way how we are rejecting there, but we are leaving an equal low. An immediate rebalance. We are leaving this low, but I don't like this. Order block right there. Pull that over. We rejected that. Don't like to see that. Fair value gap here. Pull that over. See if the fair value gap pushes it lower. So for a nice reaction. There's that low taken out. Beautiful. So we are still on site. We're still pushing out lower. At this point in time, stop to break even. No need to have any risk on the table when we've already rallied about 13 points or 7%. So that's about three handles roughly. Three handles that we already rallied. So there's no need to have any more risk on the table. Order block right there. We do have this inversion here. Two down close candles here. Looks like it's going to be a high resistance run. It's going to go lower. Anyways. Excuse me. Let's cover the position. US 100. So as I explained, the reason for taking it, back to where that 15-minute, let's just go back, 15-minute wick, failure swing, rallied lower, below a low, breaker block, time of day. Time of day was, well, there's that. Take profit just got hit, and then we rallied back. 8:30, just at the there you go. So it would have just triggered you on the TP, and then right after snags right back and clears out these highs and those highs. So that was another little uh winner for the for a tape read at least. So there's that one. Nice. That's good. So I opened up the charts. I was looking at the charts this whole time, and we have the breaker block. Let's mark this stuff out for you guys so you're able to see this stuff. I didn't have it on the charts. Oh, that breaker block, and we had the inversion sitting up there. Notice we barely tapped into that inversion right there. One more time. Order block overlapping right there. Time of day was 7:50 to 8:10. That's a macro. So I said, what the heck? Paper trade. Here we go. Took one right there. Right there. Inside this breaker block. Took it right there. Stop was right there. Breaker block. Inversion. Order block. Just noting this now, but I was looking at this little gap here, by the way. Barely visible. Barely visible. See if I can darken this up a little bit. Let's make this darker. Wasn't looking at this one. Wasn't looking at that one. That's my mistake. I was looking at this breaker block, order block, and that small little gap sitting nested right there. So that was the initial short. So this should be here. There's the entry. So the stop was resting above this fair value gap. Breaker block, order block, gap. Stop could be above the order block, or I just opted to put it up here. Give it some more breathing room. And there you go. It panned out. 12% right there. Where's my there you go. Exited on a limit. So there you are. There's the stats. Stats. This was the previous position that we took on the 12. I took another one on the account, which also turned out to be a L. And this is there you go. 807. There's the position right there. 340. Let's see. What does that leave us with? 340, 100. Let's see. Let's add this stuff up, man. 384, 50 plus 124. What's that? 124.50. What's up with all the 50 cents? That's about 509. And we can subtract 346.50. It's not bad. Not bad at all. It leaves us with a drawdown of 162.50 cents. So 162.50 $50 a drawdown there. Yeah, it's about 500. Yeah, 500 ish. More than 500 on the drawdown. Let's see here. What did I? Yeah, 509. 480. Jeez, man. Did I add this up correct? 480, 450, 124, 50. No, I didn't add it up correctly for some reason. It's $609. 484.50, $124.50. Yeah, I don't know why do I made a mistake there, I guess. And subtract 346.50. Still not bad. It's 262.50, which is still in a, I guess you could say that's what we would still technically, if you added, take it from there, add up those. Oh geez, probably would be helpful if I actually show the screen. Sorry about that. So there's that position on the 12 that we took 484.50, and then ended up taking another one which is 124.50, which I took, and there's this one of this morning which was 346.50. If I add these two up and subtract the loss, you end up with 262.50. So looking at these three positions, then we still have a drawdown of $262. Overall, the account is still sitting at $1,490 in a profit, which is not bad at all. So, I mean, another good position, and that will be back in a profit as far as the thing. That's not bad. There's that. Let's just see the orders. See, there you go. I had limits set here. I had took a market entry and then had a sell limit and a sell stop, and that was filled. So there's that. Good. See, there you go. Positions. Yeah, got nothing open right now. History, whatever. There it is. 364. So, yeah, took a loss, took it home for the weekend, and I ended up taking this one shortly after I posted that video. And yeah, took that home. It's a 400, 500 and whatever. It's almost $600. It was about 600 if you add it up, and then so yeah, it's about $262 still in a drawdown. No need to rush to make all of it back in one position. That's not how you want to do it. You slowly get back into it, find a good setup, take a good setup, and you work your way back. There's no rush in trying to make back all of the drawdown in one go. You're just slowly going to make it back. And yeah, that's how you're going to get back out on top. So that's something that you write down in your notes. You slowly make it back. You're more than content with taking that loss home for a weekend and looking back at it, seeing where you went wrong, what could have been different. And the only reason we took that loss was because of the fact that the spread on the paper trading account. That's the only reason we took that loss. So I wouldn't have done anything different on that position. I followed the rules, executed on it, and it was a loss because of the spread. Okay, and that's is what it is. Not gonna cry about it. It's part of the game. It's part of it. So it shouldn't have been a loss, but it's a really good example for me to show you guys how easy it is to make the drawdown back. And this is the problem with a lot of new traders, and ICD talked about it just last week. Leverage and the fear of losing and greed. Over leveraging, fear, and greed. He had a really nice space that he talked about. And he posted a really nice tweet saying that if he could just take one micro and just completely negate the risk to show. Let me go find I think I got the tweet. Let me go find the tweet. I saved it. Let me see if I can find it. I feel like I should execute on one micro or two at most. For many of you to see the leverage is what is stopping you. This is why you wig out. Fear. Sounds stupid. Sounds so stupid, so simple, so minute, but such a hard truth. Where you got a proven system that's back tested, forward tested. You traded that system on a paper account and you were able to make a profit for, let's say, 3 months in a row, okay, back to back. You're able to carve out a winning balance, okay, a profit at the end of those 3 months, 4 months. And a lot of people struggle with going into live funds, and then it's just honestly what's holding you back is the fact that now it's in the back of your mind. It's live money, it's real money you're working with. No matter how, even if you treated that paper account as a real money account, still just the fact that it's real money sitting behind it. At the end of the day, you just don't want to take a loss. You don't want to be wrong. You got that fear of losing. So that's something that you have to push into. You're gonna have to push through that, and with the fear of losing, and it's gonna cause you to doubt taking your entry, and you're gonna miss trades because of that. So then you're gonna question why why am I not taking the entry? Why am I fearful of taking the entry? And the answer comes down to you are afraid of taking a loss. So how do you combat this? The way to combat this is you got a journal, right? You've back tested, you've forward tested, and you've taken uh, paper trades. You've had a demo account which you took for 3 or 4 months, and you traded on the account following your model, and you've journaled the process where you had X amount of months, let's per se 3 or 4 as an example, and you were profitable for each of those months while still taking losing trades in between. The system still proved to be profitable at the end of that testing period. So it's important to look at that and realize, okay, sticking to the rules, you still will take losses. The system's not going to be 100% perfect. You will take losses, but you limit those losses to your what you got set in the model. You've got your maximum loss, or well, not maximum loss, but you have per trade, you have a calculated risk. You've got a set calculated risk per trade. You know, I'm if a trade's more than X amount of handles, then it's not a trade that I'm going to participate in or take. So you have a set amount of handles before you even take a position. You know, okay, this is what I'm going in with, and if I'm not able to get that stop, then that's not a trade that I can be a part of. So I have to sit it out. So knowing beforehand that okay, this is what I'm willing to risk on each position, and you got that journaled along with your back testing, forward testing, and along with the paper trading or the demo account for 3 or 4 months. If you stuck to that system, then you got those results, and you can look back at those results and say, okay, I've got this fear of being wrong, of losing, but even with losses, if I follow my system, the system still pans out at the end of the day with a set of trades, per se 10 trades. The system still pans out and you're still profitable at the end of the day when you follow the system. So that ends up negating the fear. So you end up killing the fear with proven results. And then you got to go in, you got to trust the process. You got to trust the process. And nobody said it's going to be easy. You're going to have to push against that uneasy feeling when you get into that position. You're going to have to push into that uneasy feeling. You set a limit, you set a stop, you manage the position. And that's that. Let the system prove itself to you. It's done so in back testing, forward testing, and demo. It's proven that it works. The results are there, black and white. They're on paper. They're on digital paper. So let the system do what it's made to do. If you don't give the system a chance to do what you've put together, then how are you expecting to get any results? And so you look at it this way. If you start using it instead of thinking that, okay, you're afraid of losing, what happens if you win and you make consistent profits by following the system? Hopefully you have found this one insightful and you've learned something valuable from this. Until we speak again, good luck, stay safe.